When it comes to dividends associated with a whole life insurance policy, there are several what they call dividend options. And today we're going to do a deep dive on what those options are and what they actually mean and what is the best solution for your specific situation. Hi, I'm Olivia Kirk.
I'm Tim Urich. We're from Tier 1 Capital, and we're here to show you how to regain control of your money. As the owner of a whole life insurance policy with a mutual insurance company, you get to pick what the dividend option is. Now, what are those options? Well, basically, as I've seen it, there are 6 that most insurance companies offer, and there are probably a few more that others might offer that some don't. Let's take a look at what those dividend options are. First, you could have the dividend paid to you in cash.
Yeah, we saw Nelson talk about that in his book, right?
Yeah.
And certainly during his presentation.
So what that means is, at the end of the year, the insurance company will make a profit. And when you buy a policy with a mutual insurance company, that means you're the owner of the company as it relates to that policy. So any profits that the insurance company makes on your policy will be paid to you. If you choose to have those dividends paid in cash, you'll get a check from the insurance company made out to you for the profits they made on your policy.
The second option is to have the dividends reduce the premium on the policy. So instead of paying, let's say your premium was $1,000 and you got a dividend of $200, now you would only have to pay the difference of that $800. So it would reduce the amount of premium that you need to pay towards that policy.
So both of those options basically put money in your pocket today.
Which feels good. Immediate gratification.
Oh, you sound like a millennial.
I am.
So the third option is to have your dividend purchase 1-year term insurance. And what'll happen is the dividend will grow every year because the company should be making more profits on your policy. But you're getting older, so the cost of the term insurance will increase. And basically, you'll get roughly around the same amount of death benefit year over year added to your death benefit of the original whole life policy.
Yeah, so that's good for it buys up a certain amount of death benefit, increasing the amount that would be passed on to your family or charity of choice at the time of your death.
Exactly. The fourth dividend option is to have the dividend accumulate at interest with the company. So the company will set up a separate account for you and your dividends will go in there, and that account might be earning 3.5% or 4.5% from the insurance company.
Number 5, which I think is the best option for your dividends, is a paid up addition, right? So it goes into the policy, builds up that cash value, also has a death benefit associated with it with no further premiums due, and it allows your money to grow and compound on an uninterrupted basis. Plus, you have access to that money through the loan provision. So it kind of compounds on top of compounds on top of compounds within the policy. So it accumulates more quickly.
Yeah, so basically what happens is you get paid up life insurance inside the whole life policy that also creates more dividends. And then those dividends create more dividends. And then those dividends create more dividends. And that's how it sort of compounds. So you get these paid up additions earning additional dividends, which goes back into more paid up additions, and it just keeps growing.
Exactly.
Yeah. And then the last dividend option is if you have a policy loan, you can use your dividend to pay the loan interest, and then any excess dividends could be reinvested or used to purchase paid up additions. So the 6th dividend option is to pay the loan interest if you have a loan, and then the balance to paid up additions.
When it comes to dividend options, I mean, at the end of the day, they're a bonus, right? They're a return from the insurance company. So they're all a good thing. How you put them to work is up to you. But these are the 6 options that we know of. If you know of any others, leave them down in the comments below. Also, if you like this video, be sure to give us a thumbs up and don't forget to subscribe. Also, if you like this video, be sure to check out these 2. We picked them out special for you.
Thank you so much for watching our video. And remember, it's not how much money you make.
It's how much money you keep that really matters. We'll see you in the next one.